What's up, everybody? Woo! It's been a hectic weekend with everything going on in the Middle East. A lot of ups and downs. Futures open should be spicy one way or the other. Which weapons manufacturers are we longing? Um, we could look at some. Boeing's wildly undervalued, right? I'm sure we'll forget all of their problems if they need to manufacture defense components. RTX has already been running, yeah. Boeing broke out of consolidation. Did it? It looks like garbage. Oh, RTX did. Semi-serious, is it worth buying DJT in case he wins or gets another lifeline? I mean, you got a long time until a decision is made on whether he wins or not. Trump is king of throwing himself lifelines, though, so something could come up to spike valuation. But I think people were pretty upset that when they found out that the company doesn't actually make any money. What's the Vegas over under on Iran having their only oil export port liquidated? That would be I think the US would probably not allow Israel to do that. Oil prices are already pretty contentious. I feel like the US would probably be pushing back against any kind of retaliatory strikes within Iran, but they might, allow it in Syria, Libya. Or not Libya. Well, maybe. Lebanon. Jordan, maybe? I know Jordan issued like flight restrictions also. I got my Twitter chat GPT PhD in geopolitics and warfare. Nice. So you're prepped. Just make you Secretary of State. So if they're attacked, A koi, B koi, and C koi, and swim away, leaving decoy. Ha. Did you just say Nvidia will manufacture chips for weapons? No. There's a big nothing burger outside the fact that the U.S. taxpayer paid $1 billion to play Fruit Ninja with missiles. So I have a buddy who's at ONI, which is like the Office of Naval Intelligence that I was talking to last night. Um, and he said like big concerns right now are that like Iraq's strikes are going to, or Iran strikes are going to embolden Iranian backed militias. Um, and it could increase, terrorist attacks and like smaller micro conflicts. Um, and then that was about it. I said that's like the primary concern right now is that it's kind of like a show of strength, and then other countries may follow suit, or other or Iranian-backed militia may. Our strategic oil reserve is fine. You need to stop watching Fox News. Wasn't he sold that shit like at the top, man? Like, can we talk any portfolio construction with a resurgence in inflation and crazy deficit spending? I mean, I would argue that the inflation and deficit spending have been there the whole time. They're just being priced in more now. But what construction? I mean, you can go short long-term treasury products. There's a million avenues to do that. There's probably a couple of ETFs that offer exposure to like tips. That might be an option. I mean, commodities, energy, utilities, all very important. Infrastructure shit, manufacturing to a degree, depending on the sector. Um, those might be overperforming a little bit, depending on how freaked out the doomers get. Maybe consumer non-durables. Why the BTC drop? Why not? It's worthless. You know that, right? So BTC has no intrinsic value. And so the price of it is not does not need to be justified by anything. Israel's threat to respond strongly is concerning, depending on how they respond and where. I don't think it's that concerning. It's just Iran, right? They've been on like the verge of a like a coup for 50 years. Zoom out on the 5-year on BA. Yeah, I know it's cheap. They're also wildly inept. Yeah, so I mean, it's not like there's not a good reason for Boeing being cheap. The run up was for the new Dreamliner. It's not inept, it's cost savings. If the goal is to make something explode at the destination anyway, then maybe that's a good thing for Boeing. I think that most of their technical issues are in flight. But no, I mean Boeing's probably not super exposed. I think isn't I think Lockheed's the uh largest drone manufacturer. Northrop Grumman, Raytheon, maybe like Israel Aerospace. And then what's the other one called? It was like Elbit or something like that. General Atomic, maybe. I'm not sure if that's true or not. It is it atomic? General Atomics Aeronautical Systems, I think. Thales? I don't know about them. Lockheed's by far the biggest. It's probably like Lockheed, Raytheon, Grumman, I would imagine. LMT's pretty cheap and not technically in a bad spot. Had a nice bounce end of day, Friday. RTX. Uh, the biggest fucking problem with RTX at 100 is that people are gonna sell it. Oh, no, that's the wrong stock. There we go. Northrop's fairly cheap right now. That might not be in a bad spot. RTX might not. I don't think I like it that much. USRI. Mm. 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 Yeah, mostly just those three. I'd probably be interested. L3's more electronic systems. Still need those, right? All the like basic ass investors are gonna chase LMT, knock, and RTX, right? Then if you're smart, you target the supply chain over the longer term, but that's only viable if there's escalation and production capacity needs to increase. Right now, we've got just fuck tons of military equipment that no one's using. So the idea that, we're going to suddenly need to start mass manufacturing drones or new military equipment is ridiculous. I mean, think of it this way. The most obvious market reaction is usually not right. And the most obvious market reaction in a situation like this is everybody is going to go full port LMT, right? And then LMT is going to be like, well, we've been making drones for the last 15 fucking years and have never used any of them. And so then the net benefit over like the next 6 months is that their inventories go down a little bit, right? Yeah, but that's not like DARPA funding and stuff like that. It's not going to be money that's realized immediately, right? We'll get more defense spending because everybody in Congress will 100% agree that whatever arms Israel wants, we should give them. But the effect of that money getting pumped in is probably just going to go towards, stagnant inventory. It's not going to ramp up production. It's not like we've started World War III, right? Anti-drone EMP guns. Oh, Jesus. Is the market fucked come Monday? We'll talk about that later, but probably not fucked. Okay, best long term if this does go big. Boom. WWTRES. I don't know what either of those are. Boom. What's oil field services? Oh, does go big boom. World War Trace. I see what you're writing. It's not in English, but yeah, I get it. That was confusing for a second. Um, I mean, I would probably look into supply chain or commodities exposure over the long term, right? Because that's where all the demand on the production side will be focused. And if there is a war of any significance in the Middle East, or that's not a proxy war, um, then production will spool up, and that will put huge demand on commodities, and supply chain restrictions are only going to get tighter than they already are. It's like a whole different story when you have Houthi rebels in Yemen shooting fucking 1970 missiles at cargo ships versus Iran, taking out all the cargo ships that come anywhere near the Red Sea. Similar to the start of COVID, more explosives, energy through the roof. Appreciate it, man. Actually, you kind of think like post lockdown when commodities kind of skyrocketed as consumer demand drove increased durables production, right? Because I mean it's still durables. It's just not going to be consumer driven. Let's hope no country wants to get set back to the Stone Age. I don't think it's going to escalate to nuclear warfare. At least not anytime soon. And it's questionable if Iran even has nukes, right? Yeah. Anyway, let's talk stocks real quick before we get Dork and J Fresh on, because I did want to go over a couple of the memes. Well, actually, I didn't really want to go over any of the memes, I don't think. None of them looked that interesting. GameStop still looks like a wet bag of shit. Upstart's getting pretty illiquid. Um, that most recent breakout shorted back to around 23. I'm really interested to see if we find support here or we get shorted down even further. Remember, rising interest rates and tightening credit conditions really, really bad for Upstart, and that's going to attract shorts. Except Upstart, as we know from prior examples, is a terrible short target that carries a massive amount of risk due to how illiquid it is. It is more illiquid than it used to be, or more liquid than it used to be, like back when it squeezed, but not significantly more. It just has broader ETF exposure nowadays. But I would say that we may see this continue to get shorted over the next few months. I don't think short positions have built up on it too dramatically yet. Um, Fubo got knocked under 150. I mean, there's still some liquidity there for shorting, so they could potentially push it further down. There's probably a little bit of support around the 130 level. It may just bounce back to 150. It still looks pretty choppy. I don't see any reversal in the shorting, so it's probably going to uh continue to chop in this range. But if it does fall, my next targets to the downside would be like 130, 135, or a dollar. A lot of this is just it's not even just Fubo. It's IWM starting to bleed off. And the long positions on IWM have been falling off pretty rapidly over the last like 3 weeks. And that's putting a lot of downward pressure on all of like shitty mid cap meme stocks or small cap meme stocks. Maybe not the time to ask. I look at TX as a way to get exposure to nearshoring. Steel company that operates in Mexico and Brazil. I'd appreciate some brief thoughts if you have time. I could check them out. I want to actually look at one other thing. Okay. Ternium. Oof. The payout ratio is pretty rough. So if nearshoring increases demand, I'd have to look more into their current production. Because if they need to scale up production to meet that demand, that's going to come with a lot of capex cost, right? And at a payout ratio of 96%, I can tell you the first thing that's going to go. Palantir is still good to go. Yeah, I could do that one too. So Palantir had a kind of a wonky day Friday. I think it failed. Yeah, it failed back to trend. The positioning on this is still pretty bullish, and it hasn't fallen below. I don't think it's fallen below. Hold on, let me make sure that statement is correct first before I say it. Yeah, it's still above DN. DN's at $21. Um, the big issue here is that it failed that 23 test, and so the charm decay on it remains negative, and some of that bullish options interest that was picking up is starting to fall off a little bit. So the bulls are losing confidence in their breakout that they were pushing for. And they did try like 3 times and fail horribly. So there's a good chance, I would say, that if this continues to slip, especially below that trend, it's pretty dead. Some of this may be reliant on what the market does Monday, Tuesday, Wednesday as we move into SLD. And if it's possible, if we get like a big move in like mid caps or something like that, then this could benefit, since it is in kind of a negative, well, slightly positive gamma environment, but slightly negative delta. Also, some of that negative charm will have fallen off on Friday. So yeah, I mean, it may still have a chance, but I would say it's getting really risky. Um, probably not worth pursuing unless it gets a break back above the 20, let's see, like 20, 2394 level, which would be like up here at the mid PT. That's a little ways to go. I mean, it needs almost a 10% move to get that breakout. If it did break out there, a lot of room to run. Very flat gamut of the upside. But this range, down to about 21, is pretty rough. And the bottom of that range, fairly bearish. Yeah, it was Palantir was tricky because it just kept sitting like right on risk, right? And so it wasn't necessarily a bad entry at any given point, but I don't really like the way it looks after the end of last week. Is 2300 a reasonable target to add more gold? I'm not sure it's gonna sell off that hard. Didn't it bounce back end of day? Yeah, it did. It caught a support at 2350. This could just rip right back up again. Most of its big sell-offs have recovered very quickly. This is like a mean reversion back to the 2350 range. Looks like 20 they closed 2374. So yeah, I can see that bouncing back. This seemed just like profit taking. There was a lot of demand Friday for futures or for treasuries rather. Um, People think it was because of the escalation going on in the Middle East. So anytime anyone thinks there's gonna be war, everyone wants to go long treasuries. But since that's kind of fizzled out into nothing, I think there's a good chance that we could see Monday see a significant amount of treasuries sell off after the like weekend holding risk has passed. Check out Axon. Looking for long-term buy and hold. I mean, asking me about long-term holds on stream, not always the easiest to answer. Aerospace and defense. Because I can't do like the deep research required in a couple minutes, right? I mean, I would sure as shit watch out if it fell below 303, but this is Taser. Ow. Eh. Projected earnings forecast. What's the dividend? None. I feel like their PE is already a bit inflated. I'm not sure that there's much to get out of this. I don't. I'm not sure this is going to beat index returns. Maybe if you could get it at a significant discount from the current price, but it's trading at ridiculous multiples already. It's probably not going to sustain those multiples. Their debt's not too bad, but it's not like revenues are just taking off. Solid growth. – Hmm. Operating expenses have been going up quite a lot, which is pushing down on their net income. I mean, I would say that they're probably very stable, but I'm not sure that there's much more to get out of this in terms of returns. Anyway, maybe if they can improve their margins a bit. I don't really think we're going into a period where margins are likely to improve substantially. I wonder who. I would say that their biggest markets probably like police forces, right? So you're thinking like municipal spending goes up. Yeah, I don't know if that's going to be something that happens in the like near term. Keeps acquiring contracts across California, so it looks like the growth will persist. Yeah, but that growth comes with a cost, right? Like that growth is coming with a significant increase in their total like capex, right? Their operating costs have skyrocketed relative to their growth. So that might I don't know. I mean, if I could get it at like a good discount from here, I would consider it probably a solid buy. But at the current prices, I'm not super interested in it. Anyway, where was I? Top still kind of looks like garbage. Although it may get some covering this week. It's interesting. We'll see. There's plenty of liquidity there. Down to $1. Um, they're just gonna go out of business. I don't know why I'm still watching that one. Beyond fell off reg show, so I know a lot of people wanted me to talk about this. It's still really illiquid. I think honestly, I think the only reason it got off reg show at all was that IWM sold off for multiple consecutive days, right? Without any substantial recovery, and I think that just loosened up liquidity enough for them to come in just under the threshold. Um, it could just go right back on. It's generally does. I think most of the periods where it's come off of reg show, it's only lasted like maybe a week or two before it's back on again. Um, I'm gonna watch it. I mean, I have 7, 8 long combos for 2024 25. Sorry, in Jan. I might add to those depending on how far it drops. I'll probably target like the I don't know 580 range. Let me look at where that is right now. Nope. Maybe like 520. Somewhere in the $5 range. I'll start adding and then see if it goes back on reg share again. But yeah, I mean, it's off for now. So I forget the minimum number of days required for it to go back on. I need to look that up again. But I would say it probably will. We haven't seen any covering since that big earnings spike, right? And that was extremely short lived. So I would say it's still generating fails at a rate greater than they can be cleared. As long as we get a little bit of stagnation in IWM or IWM bounces back up, um, it should create enough pressure to push it back onto reg show again, given that enough time has passed. BNAD, nothing really going on there. GoEV had a really nice bounce. This one was kind of interesting. It's like 16 days on reg show now, I think. After the reverse split. Seems to have a decent amount of support at $2. I might get back into that. I bailed on it last week because markets were tanking, but I might get back in, target the 250 level, but maybe I'll get a little bit more theta on it. There's been no significant covering since it went on reg show, so and most of the fails probably came from shorting this breakout, and that kicked it onto reg show over here, right? And so yeah, I mean they're gonna have to get rid of that synthetic position at some point. So maybe I'll get like, oh, I don't know, 60, 90 days of theta, pick up something out of the money and see how hard it runs. The float on it's significantly smaller now. After the reverse split, I think total share float's like 58 million, which is right in that sweet spot for getting like squeezes off of the volatility positions moving around. PBR, BTU did a shelf offer, which was kind of interesting. Their margins have been kind of cratering recently due to the drop in production, but and the lack of demand out of China. But I think a shelf offer might help get production back in line. So not really too worried about that. Although with that shelf offer may come a discount. So if coal is something that you're interested in buying into, given all the things that are coming up, and hoping for demand for coal to increase over the next like 3 to 5 years, there may be a discount coming up due to the shelf offer. Personally, I've liked to buy BTU around 18. I sold some in the money covered calls towards the end of last week. I might sell a few more this week, just to hedge any downside that might come from the shelf. If it stabilizes, we don't get any downside from the shelf, then I'll probably just buy them back. We gap down here. We slam right into the delta neutral JPM puts. Again, I'll get into the indexes and stuff when Dork and JFresh hop on. But they're close. Yeah, they've definitely picked up a lot of delta recently. Apple was the best performing of the stocks last week, and we did note last week that Apple had kind of been crushed for long enough, and some positive options positioning was picking up on it. That was then exacerbated by Apple's announcement that they're going to be switching over to AI chips in the MacBooks. It's not like MacBook sales have been getting substantially better. It's just another product line that's been kind of meh over the last couple of years, along with the iPhone. And so I don't think this is going to be very long lived, but for now, generally when options interest picks up on Apple, it's a little bit further dated. I would say for now it's got some range to run. Gamma moved positive, and Delta's just almost positive here. If it slips back below 175, I'd probably be interested in selling bear calls against it again. Those have been really good over the last like month and a half. I think they still are. But I would want to see that failure at 75 to confirm before selling them. And then maybe a little bit out of the money to account for any near-term volatility. So yeah, just continue harvesting theta there. AMD, I don't know if there's much to speak on. This is obviously failing its trend, and starting to continue down back to levels since from before their last earnings. 160. Hold on, give me a second. So yeah, Delta a little negative. Gamma's just about to break through gamma neutral. This would actually be a really good point for AMD to bounce. And I would say a bounce could go back as high as 177 if it were to bounce, except total Delta's been falling off quite a lot. And call interest has been dropping off pretty quick too. Like call interest has fallen steadily over the last 3 weeks. Bought puts haven't really increased. Charm was negative, so that's like a slightly positive effect in next week because the MM will have to pick up some additional delta. But yeah, like the overall interest in the stock has been just waning, and so if it loses like that 163, it's actually just a little bit below GN right now. So maybe a focus on delta neutral at 162.87. A failure there could precipitate some pretty significant downside. So I would watch this level either for a bounce or a continuation, and then once that's confirmed, maybe pick up a directional position. Amazon just won't fucking quit. Let's see if anything's actually changed there. This has looked like slow growth over the last like 8 weeks, and that's pretty much held true. It still looks like that, like moderate positive options interests. Might be a little pullback due to the fall off in charm last week, although most of the charm fell off on Thursday. Delta's positive, gamma's positive. Yeah, I mean, no reason to think that this would pull back sharply. This may still be a good target for selling puts, but I would confirm the trend, make sure indexes aren't dropping before I did, you know. But yeah, I mean, it still looks just like stably up. Google, Google is starting to look a little weaker into the end of last week, so I want to take another look at that again. I know Friday night or Thursday night it was kind of interesting. Yeah, so a decent amount of call interest fell off the short dated calls, but Delta, like adjusted Delta, still held positive. Um, it's in a similar position to Amazon, but with less, like the call side of the chain isn't quite as strong. Um, I would look to see if maybe short puts pick up here. The range it's in is supportive, right? It's supportive for the upside. Market makers buying any dips. So if I could catch one of those dips, maybe I'd sell puts on it, or yeah, maybe I'd just sell puts on it. I don't think I'd want to pick up a call because I'm not sure that the upside interest is going to come back as strongly after the expiration. Maybe after OPEX, but not right now. Meta. I think Meta's gotten any more attractive. Let's see. That's fucking weird. Man, call interest has almost all but disappeared on Meta. It's so it's so fucking low. I think it's historically the lowest it's been since well, ever since we started tracking it, at least, which was like Jan of 23. Gamma's somehow still positive, and there's still a massive amount of total delta. 48 billion, but adjusted delta has been falling off pretty steadily since like March 8th, and it's now getting quite negative. Hmm. But the massive amount of short puts that came in post earnings back in Feb are starting to expire, fall off. Total Vega exposure is declining. This may be starting to turn around, but I would probably still want to confirm uh, somewhere near. Hmm, somewhere under 490. I think if it loses 500, that's probably pretty bad. Amazon's investing in nuclear. We see stocks above 20-day, 50-day. They straight got boofed. Yeah. Why Google? I mean, the options interest on Google is generally lower, so the spreads are wider. It usually has slightly more volatility, but you're not arbing anything. You don't you don't need to trade Google. Sure, it's preferred. I don't think anybody gives a shit about their voting rights at Google right now. There was some weird arb on the two of them like a couple weeks ago. I don't know if it's resolved. Yeah, no, it hasn't. Google is still trading cheaper than Google than the non-preferred share, the Class B shares, which is strange. That should not be the case. This should trade slightly higher, but it hasn't been. I don't know why that arb isn't resolving. Short. I would probably. I mean, yeah, you like you could, right? You could go long Google, short Goog. That would be the like the pair trade there to try to capture the like that arb resolving. Um, yeah, it might be worth it. I mean, the spread's kind of wide now. 157 to 159. I don't think you're gonna make like. I mean, you're not an institution, so it's not like you're gonna be able to leverage the fuck out of that to make decent money off of it. But you can make a little bit of money off of it, I guess. I wouldn't be really interested in that though. Microsoft still just looks flat. Again, passive investment. It's not really going to be heavily influenced by its options market, which is true of Meta as well. Yeah, I don't see any big changes there. Call interest has been falling off pretty steadily, but that's true across most of big tech. Um, Adjusted delta is negative, but total delta's been pretty flat. Gamma's still positive, so it should be fairly stable, right? We still have the buying the dips there. There is a decent amount of charm that fell off with this expiration. That may have some effect. Might pull down a little bit on it, but gamma neutral's at 406, which is still a long way off from spot. So Netflix actually started to look a little shittier into the midweek. Um, I might be ready to lose some money on this again. I think the brief surge of call buying that picked up at the beginning of the prior week has finally kind of dropped off. And then my biggest problem with this is gamma's still positive, and gamma neutral is at like 610. But if it did break below GN at 610, I'd probably be pretty interested in At least picking up like a near term short. I think it's kind of way overblown, right? Earnings are coming up kind of soon. Let's see, April 18th. So earnings are this week. Maybe, maybe post earnings it might be an attractive short, unless it drops like 20% from earnings. That would suck. What about the bank plays? I shorted JPM after Diamond's statement, which worked out pretty well. I don't think any of them are gonna recover because his guidance was so fucking terrible, right? I will say though, if the market bounces back, those might be a good target because they sold off so hard. I think a lot of the other banks are broadly disagree with JPM's take. I mean, JPM's been really bearish since the beginning of the year. Their end of year target for the S&P is like 4,600. Um, Diamond's been outspoken on several occasions that he thinks interest rates are going to climb higher, as are yields. But everyone understands the risk present to the banks, the banks like mark to market losses, right? If yields are continuing up. That was a way last week for bank earnings. Diamond said many economic indicators continue to be favorable. However, looking ahead, we remain alert to a number of significant uncertain forces. First, the global landscape is unsettling. Terrible wars and violence continue to cause suffering, and geopolitical tensions are growing. Second, there seems to be a large number of persistent inflationary pressures, which may likely continue. And finally, we have never truly experienced the full effect of quantitative tightening on this scale. We don't know how these factors will play out, but we must prepare the firm for a wide range of potential environments to ensure that we can consistently be there for clients. Oh, he Big Bear. Yeah, he's been Big Bear. I mean, he hasn't. I'll give Diamond that he hasn't bullshitted anybody. He's been pretty straight up, and he can do that, right? Because he's probably running the GSIB that has the best balance sheet out of all of them, right? So while all the other banks are like, oh, Nvidia to 1,500, he can just be like, nope, that's bullshit. He's gonna retire too. Well, he might. He's selling some shares, and you best believe he sold them at the top, right? Legacy, yeah, legacy. I mean, but Ray Dalio's legacy was selling the bottom of the market in October 2022 and telling conspiracy theorists fibs about China to pump his bags. You say Ray Dalio again? I'm gonna full port yen. So I'm interested in Netflix short below 610, but obviously picking up one pre-earnings very risky. Maybe I'll get like an out of the money debit spread and just see what happens. Their last earnings missed a little bit. It'd be and this one's expected to be quite high. Estimates are at 451 a share on 9.272 billion in revenue. So almost a billion more in revenue expected and double the EPS. I might pick up some out of the money debit spreads because I have a hard time believing Netflix is gonna beat that. They might though. I mean, it's not completely out of the question, but that's pretty ridiculous. In fairness, shorting October 2022 is a lot of people's legacy now. I mean, I went long October 2022, but I did short Nvidia, so I feel like those two just balance each other out. I'll need another big play before I can retire. My king. Nvidia, which is I'm sure the one everyone's thinking about right now, slipped that 900 level again on Friday. Honestly, Nvidia's been stuck in a pretty weak spot for the last couple of weeks, and you know, with all of that persistent fund flow into short call strategies, right? Without the bullishness to back it up, that has a really negative effect over a long period of time, right? So, you know, we've discussed a lot about Nvidia's price movement in the past, and you know, you've got all these like actively managed ETFs selling calls, right? And then, you know, Nvidia gets enough bullish momentum that it squeezes those calls out, and then they sell calls again, and this just keeps happening, and it's like stair steps up. The problem is here, if you don't have the bullish momentum, right, that backs those moves, right, and forces those calls to squeeze out, like at 900 right now, you start to fail, right, and then those calls get sold lower, and then that fails, and then those calls get sold lower, and then that fails, and the sentiment broadly is dragged down over time. And this is kind of the like a little bit of that gearing effect that I've talked about in the past. But you know that you'll reach an inflection point there where that passive fund or that active fund flow really starts to work the other way. And if that carries on for too long, if Nvidia's price keeps declining for an excessive period of time, as it recently has been, that can start to go faster and faster, right? And then they start, you know, then they're gonna start, you know, selling calls. It's gonna drop. They're gonna sell calls lower, right? They're gonna roll those down, and then you know, and then it's just gonna keep slipping more and more. And the next move is gonna be a little bigger because people are like, I'm gonna get the fuck out because the stock's been going down for 2 months, right? And I bought it 1,000 or 950. Obviously their upcoming earnings could squeeze out all the short calls again and back to square one, but right now it's having a very negative effect. Gamma neutral on Nvidia sitting around 842, which isn't too far from spot. Gamma max at 951. It had a big bullish push Wednesday, Thursday. But Friday's price action kind of pulled back on that. Had about a billion in charm fall off into the end of the week. And bot calls continue to decline. And we are seeing a contraction in total gamma, which is usually very bearish in the long term. So sentiment is definitely shifting there. And I mean, if there's a stock that has range to the downside, it's definitely fucking Nvidia. So am I going to short Nvidia again? Absolutely. In the meantime, though, until it breaks through delta neutral or gamma neutral, you know, I'm gonna be conservative and continue to straddle it. 24.479 billion revenue estimate. I'm well aware of how absurd it is. Also, estimated EPS 5.55 per share. I mean, Nvidia's still cyclical, right? One of my boys in LI is going on a date with a trans individual post surgery. Is he gay now? He said he isn't. Is he attracted to men or women? It seems like he'd be attracted to women, which would make him not gay. This is absurd, Gurk. Get out, man. That's easy work for Jensen. Just doubling revenues every quarter forever. We'll see. Yeah, it's fraud. Easy. I've just described several ways of making money. Let's talk about our buddy Elon, the failed techno king, who's now given the throne to Jensen. And first things first, let's talk about what happened to Tesla stock when the gearing effect no longer favored it. This was the poster boy for this kind of price behavior all through 2020 and 2021. But the failure was. Anyway, this has been bouncing around between like DN and GN for a few weeks now. It really hasn't picked up any meaningful downside moves, and it hasn't had very many meaningful upside moves. Delta is still fairly compressed, not a lot of it on the chain. That doesn't seem to be changing much. Call interest has once again, total call, like bot call delta has fallen negative again. Charm is inconsequential, and gamma is also negative again. I said earlier in the week that nothing really got bullish unless it broke back above. I think I was targeting like the 70, 78, 76, 78 level. That's still pretty much true. 76, 79 now. The only way this really gets bullish is a breakout of 80. Not only a breakout of 80, but a serious amount of delta needs to come in. Otherwise, I think it's just going to continue to slowly bleed off. With a downside potential move as low as 136 over time. I don't expect their next earnings to be very positive given their sales reports over the quarter. All right, let me see what the quants are up to, and then we can get into some index stuff. You guys can timestamp that or whatever if you want to go over the Mag 7 and stuff again. What's up, guys?
So anyway,
NFTs.
yeah, so I put this in my butt, and then when I got the token, then I was able to turn on the actual functions of the toy. It was pretty cool, actually. Not gonna lie, bullish on GME.
So speaking of that, you just reminded me of a conversation I walked by on Friday on the street when I was walking to my car. I don't know the context of this conversation at all. It was just two grown men, looked like middle aged, mid 40s, well dressed, just standing on the side of the road waiting to cross the street. And all I heard one of them said, it was really big and at least you got it out. And then the other person immediately responded with, oh, I put it right back in. And I have no idea what they were talking about.
Hey, guys.
What's up?
Just listening to you talk about NFT sex toys. I assume that's what JFresh has been advertising on his Twitter.
Yes.
Yes.
Yeah, get yours today before it's gone.
It's an AI NFT sex toy too, so don't forget about the AI, feature.
AI. It's actually mostly AI.
You can ask it to recite, poems from Shakespeare, and then it'll recite them incorrectly.
In your butt.
In your butt. It's amazing.
Yeah, it's going to have the new Apple M4 chip with AI.
Yeah.
So it'll have AI, and then we can AI.
Did you guys see there were like, I think it was Engadget got one of those rabbits, and they said this thing's a useless piece of shit.
Probably. I think it was also Engadget or somebody else that got a hold of the humane AI pin and said it was also a useless piece of shit, and that they felt embarrassed that they bought it. What was funny is that like the reviewer was so excited when they first got it to try it out, and by the end, literally said they were embarrassed to wear it in public and embarrassed that they even bought it and didn't want to talk about it with friends.
I bet their friends knew they were getting it. Like, hey, how's that humane pin going? He's like, I don't want to talk about it.
Yeah, it's the alternatives era.
Wait, JFresh, did you get the extended warranty on your rabbit when you bought it, or no?
No, I just bought a couple because I knew I'd want to have one. I don't want to wait in between. If one goes down, I'm gonna need one immediately.
Yeah, you don't want to have to think of a sentence on your own. I mean,
yeah, I don't want to have to ask Siri to do the exact same thing on the phone that I already carry around.
You know what those things remind me of is there's like an episode of Rick and Morty where Morty gets this like the crystal that like shows him how he's like going to die, and he just plants it on his forehead and like literally like is like making sentences that make sure that he dies the way he wants to. This all this AI shit makes me think that's what people are going to slowly turn into.
I'll be honest, I still watch Rick and Morty every once in a while, but I've completely lost the plot of the show.
it
Or
never
maybe that's
had
the
one.
point.
Yeah.
Well, that's the point. But there's so many like I don't even know like who the real Rick and Morty, if they even exist anymore.
They don't.
There's
They
so many
died in like the
clones
second
and-
season or some shit.
Yeah, it's really hard to follow any of it, but I think that's the point. Is it's just unfettered chaos.
Yeah.
Anyway, yeah. Well, see, here's the thing about the Rabbit AI versus all the other exact large language models stuck in a piece of hardware, is that they call theirs a large action model, so it's better.
Ooh, interesting.
Yes,
Well, how does that? What's the price? Like the price to innovation multiple for that?
Well, they're the only company that's calling it a large action model, which makes it very innovative. So, at least 3.
Okay.
In the words of
3x
Ramsey,
multiply.
on
Well, they're not
Sam.
publicly traded yet. I wonder if we could somehow funnel money into them to make sure that we also get a return on their amazing innovation.
Yes, we buy H100s.
Yeah, H100s.
Sorry, A100s. My bad.
Oh.
Yeah, we got to get the new. Right,
Yeah.
we got to have the.
A is old.
A's old.
A is old.
Shit.
Then H, B.
Oh,
Blackwell.
wait, what the fuck? Why are they? Okay.
AHB. It's the alphabet, dude. A H B C D E F G.
ZLM ZLMQNOP.
Exactly.
God damn it. Fucking AI shit. I'm glad the hype is finally dying down. I mean, it seems like when I look at like the subreddits for like ChatGPT and stuff, everyone's just expressing more and more disappointment with how just like
fucking stupid it is.
They are.
It's so dumb.
Yeah. No,
it's just. Yeah. I think what's happening is that idiots are realizing that it's dumb.
Yes,
and that might be the end of generative AI.
But I don't know. I mean, could it be possible that generative AI will have a shorter lifespan than NFTs? That seems.
I mean, NFTs geared up with the shitcoin bubble a few weeks ago.
Yeah, maybe it's not. Maybe it's going to oscillate. It's not linear, but
yeah,
there's just so much money and so much stupidity piled into AI already, and now we've got. I mean, it's clearly not over, because why do you think Apple was the only stock up on Friday? Because they announced those. I don't think it was even an announcement. I think it was just a leaked rumor
I think Apple was just
Uh,
up on Friday because everybody bought a shitload of Delta on Thursday, and they couldn't sell it all by the end of the day Friday.
maybe.
Like
Wonder-
the yeah, you should look at Apple's options chain.
Yeah. All right, I'll take a
Yeah,
look at it.
yeah, it might not be so long term bullish. Don't forget that people are bound to remember that the MacBook just doesn't sell as well as it used to. So
Yeah,
raising the
I
cost
remember a
of
time.
production on the MacBooks is probably not a winning formula.
I will say that I mean I grew up with Apple products. My father was an Apple fanatic way before it was cool. Like
God, yeah, that
it
must have
was
really sucked.
it was
All,
super embarrassing as a
yeah,
child.
yeah, all your friends had
Always
like cool games, and you just had to play like what
yeah,
was available for Mac,
and also like
which was like
specs on the Mac.
Thief 3.
The specs on the Mac were always like 50 megahertz below the state of the art.
Yeah, yeah, of course.
I guess in that sense, nothing's changed. But what has changed is that even since I was a little kid, all the way through, I mean, like till recent history, none of their shit ever went on sale, ever, at all.
Yeah,
And now there's like Apple sales all the time. Like Costco's got marked down apples and all sorts of stuff. And to me, that signals to me more than anything that that's such a hurdle to try to overcome, that they've just squeezed everything they can out of trying to turn a commodity into a fashion statement.
yeah.
So I mean I have an iPhone because I'm lazy and I'm basic.
Well, also in some of their biggest markets, it's no longer the signal of affluence, right? Like in China and Southeast Asian markets, the iPhones being like rapidly replaced among influencers in the social elite with like the foldable phones, which Apple
Yeah.
is nowhere near, right? Like I don't think they have. I mean, they might have one
I
in
also
development,
Yeah, I
but
also don't really understand the foldable phones. It seems like something that'd be really hard to make worth doing
I can
because
tell
you
you
want.
they crease over time.
Well,
Yeah,
yeah,
they
and I
can do.
don't want that.
Yeah,
But that's the time you're supposed to get a new phone, which from a business perspective is amazing, right? Because the obsolescence is built back in, and Apple's gotten really bad at making their products obsolete over time, which is something they used to be phenomenal at. But you know, the EU really got a bee in their bonnet about all that and kind of
Well, yeah, they're gonna
fucked their
start.
whole.
I saw a thing that said they're gonna start letting people do their own refurb parts.
that's weird because I've done a bunch of refurbs on my old iPhones before they did that. Like batteries and screens, I've replaced those.
Yeah. I mean, you
Yeah, but
could,
you
but
could.
it wasn't like it wasn't a process that was made easy, right?
That's
Yeah.
true.
Like the average person is not gonna do that. They're just gonna buy a new phone.
Yeah, I had to get a special toolkit to have all the tools I needed to make sure I didn't like destroy my phone when I took the screen off to get to the battery.
Yeah, and then they started bonding the screens, so you couldn't take the screen off at all unless you had like one of those UV things. To
Right, or
like,
like a hot pad and some extra glue sitting around and shit.
yeah.
Yeah, so
But
this is what I
anyways,
don't understand because, like, with Apple, I mean, they made it sound like it's this new AI M4 chip that's like juicing what's going on with Apple, but they just released the M3s in their laptops like 5 months ago. And the cycle on those, I mean, if they're already moving to a new chip, that seems devastatingly bad.
Yeah.
I don't know. I don't
And the reality
understand.
of it is it's probably very much the same chip.
Yeah,
um
yeah.
but for like $500 more, which you know is people are already kind of starting to limit spending, right? All the credit cards have been maxed out for months.
Yeah, we have
So
hit that point.
yep. And then this is really but something interesting about this part of an economic cycle when the consumer really starts to get hammered. This is where businesses have to start to compete at a price point, right, in order to maintain market share. And this is generally very very good for getting rid of inflation. But it also has a habit of killing monopolies.
Good.
Yeah,
Well,
because
see,
monopolies become so reliant on being able to control the pricing of a market, but they can't really control the baseline pricing of that market, right? And if customers start moving to more discounted merchandise, durables, non-durables, that means that, you know, those monopolies that have built their platform and controlled that market price for so long lose their ability to and then to control those prices and then start losing market share at very rapid rates.
yeah. No, I don't know why people are buying Apple. I'm not bullish on Apple at these prices at all. I would.
I mean, Apple's just like the thing about Apple though is
It's just
it's just
everybody owns it.
yeah, it's just 20% of every fund,
Yeah.
right? Like
Yeah, no, and I understand that, which is, it's great for, at least it's not gonna hopefully flop around like a shit coin, although it went up almost 5% on Thursday on news that the M3 chip is worthless and they have to already start cranking out a new chip
yeah.
on declining revenues. Super, super bullish, went up almost 5% because it was an AI chip.
Well, that's because they haven't announced how much it's going to cost to pull the product line and release a new one, right? Once that hits their books, that'll be bearish. But it's, yeah, I mean, I don't think Apple's ever going to experience a rapid death ever. It'll be the slowest decline ever, like in the history of stocks.
Yeah, it'll just kind of.
Unless the cell phone gets crowded out by a new technology for real.
You mean like the rabbit?
Oh my god.
Yes.
No,
You
not
know,
like
you know how
that.
many? Do you know how many large action models are in the iPhone today?
Zero.
Exactly.
Wait, no, Siri itself is a large action model. Are you kidding me? I can tell it to do all kinds of
No,
shit.
no,
No.
because Apple has never once called it a large action model, so it cannot be that.
Yep.
Well, large action model. Oh my god. Okay. All right. Whatever. You win. I don't even want to. I don't even want to try because you're right.
What did I
You're right.
win?
That's the worst part. You're right.
I don't feel like I won.
I know, right?
I think the biggest loss was humanity's loss, but
Oh,
Yeah,
so
but thinking about like the meme 7, which is still obviously a flight to quality, I guess. I mean, that's what happened this week. We hit a new. So I posted that we finally breached the 29% market share.
can we
Or
yeah, at this point with this much of the S&P just mag 7, it's not really a flight to quality anymore. It's like the people at the back of the crowd are like, that's the exit everyone's running to, versus knowing what's outside that exit, right?
Yeah, sure. I mean, flight to quality was certainly not a phrase I'm defending. I just
like the
picked
quality
a
with
phrase.
A.
Uh, anyway, I mean, it actually hit a new all-time high on Friday. It went up again,
I
even though
saw
like.
that. It was disgusting.
So I guess so it's 29.1%. So I guess the SPX went down 1.46. Nvidia was down 2.68. Google down 1. So Google was a relative winner. Apple up 0.86. So that was a winner. Microsoft down 1.41. So it's flat. Meta down 2.15. So that was a loser. Amazon down 1.54. So that was a loser. And Tesla down 2. So that was a loser.
Yeah.
So the only winners were Google by a hair and Apple, right? The other ones were Microsoft was flat, but
Google was like flat on the week though, right? Yeah. I think so.
I'm just saying for it to go up on the day,
5% on week over
for
week.
it to gain market share of the S&P 500 on the day. I mean, that's kind of incredible that 5 of them or 4 of them were negative on the compared to the S&P, and one of them was flat, and they still gained. Right? That just shows you how much the rest of the SPX is actually just collapsing, right?
Well,
And Thursday,
5% into Apple's a huge, huge move in capital, right?
yeah, oh yeah, for sure.
Yeah, this week was pretty spicy. Not gonna lie. Oh, Girk,
Yeah.
we should probably figure out who won the predictions for the week.
You already know the answer.
Oh, I do, but I would love to. I would love
We should
for it
go
to
over
be
it. We should go over it. I agree.
us.
You won, but you were off by $8.
Price is right.
So
Hey, I wasn't over.
no.
Woo! Yeah, I win. Yay! I just wanted to do that so I could rub it in y'all's faces. Woohoo!
That's
I'm the
fine.
winner. I am the
We
champion.
keep winning all of these little competitions that don't mean anything.
I know, right? Yeah, my Monte Carlo random points were the best.
It's true.
The thing was though, my prediction was right that we would fail the uptrend. Right, that was basically what my prediction was failing the uptrend. This is where we probably end up. You know,
Continuing to fail it.
Yeah, that was the continuation off of that insane bounce was really interesting.
Yeah, on after Thursday, the fucking yeah.
Yeah.
That was yeah, so my prediction was Jamie Dimon doesn't say anything negative that morning, and then I probably would have won.
All right, yeah.
Yeah, do we want to talk about banks for a minute? What the heck is going on there?
Yeah, so I mean their earnings were good, which is what we expected last week, right? Like they have all the headwinds or the tailwinds, right? But
like, okay, so like for
but their
example,
guidance
Wells
is
Fargo,
terrible.
but like Wells Fargo, for example, their interest income was down like 7%.
Yeah, no one's buying houses, man.
Yeah.
So they have the money to lend, but no lendees.
That's, I don't know. Why can't they just buy? Can't they just buy
The house.
treasuries and just
Wait, buy the houses themselves?
They can lend these nuts.
Wait, hold on. This is how you end up with trillions of dongs in your basement.
Wait, what
now
now
if Wells Fargo could create a company that really wants a bunch of mortgages, and then that company is then approved for those mortgages by Wells Fargo,
I don't think
that could. I don't think JFresh knows about trillions of dongs.
Yeah, I thought you were drawing something. I'm like, why are you guys laughing?
Did you? Oh, you missed it. Okay, so this like this bank CEO in Vietnam is being sentenced to death for stealing trillions of dong.
Nice.
Yeah, and she was hiding the money in her basement. What she did was she created a bunch of shell companies and then lent them money. And just stole the money. Like, that was it. There weren't any more complex layers. She just created companies, lent them money, and then withdrew the money from ATMs and hid it in her basement. It's the least convoluted financial crime ever.
It's like that guy. Was it? It was either a senator or a House member. I can't remember who just had like gold in his closet from some fraud.
Nice,
like actual gold.
Yeah. So she'd put trillions of dong in her basement.
Dongs.
Yeah,
Dongs.
and just had it hidden there as cash. Now, if she'd had a large action model that she could have brought with her, it could have recommended a better course of action.
Yeah, no, her dong laundering was pretty terrible.
And she could have lived, yeah.
She would launder her dongs better.
Crazy they're gonna put her to death. We should do that here.
Wait,
I mean,
we can't just kill rich people. That'll make the poor as bloodthirsty. You take it back, okay?
How rich are you?
I mean, rich enough that someone might try to kill me.
Yeah, very true.
yeah, Girk's part of the bourgeoisie, don't you
It's
know?
just a ratio, right?
Yeah,
Like- Like you wouldn't come after me, but Dork might.
I'm already coming after you, Girk. I'd like us to switch places every once in a while on that one, but you know, I'm okay.
Ooh, we
I'm
could
okay
do
finishing.
what was that movie with Eddie Murphy and um
Trading places.
yeah,
Beverly Hills
no,
Cop,
it's not called Trading Places. They take
Coming
a
to America or
take
whatever. Welcome to
they
America.
take a poor person and they make him rich and they have a bet. I can't remember all the details.
Trading
Dan
places.
Aykroyd. Is that what it's called?
That's
It is.
definitely
It's
Beverly
literally
Hills
just
Cop.
called Trading Places.
I thought that was a different movie. Hold on.
No, it was sorry, it was Dr. Doolittle.
Oh, it is Trading Places. You're right.
Actually, now that I'm thinking about it, it's Daddy Daycare.
I hate you all. Can we do a Trading Places with Dork and Gurk?
The issue with Eat the Rich is that anybody with 7 figures of net worth is at risk because the poorest think 7 figures is a ton. Yeah, it's like the fallacy of large numbers.
No one's gonna know. Like the thing
Poor
is,
uneducated people are like, oh my god, $10,000? You could buy 10 houses with that. Like they have the same disconnect from money that rich people do for small amounts of money. Like you guys are like, oh my god, this shit costs $500, and I'm like, that's I can find that on my couch. And then like, but you know, it also goes the opposite way.
Yeah.
So,
well, this is how I knew that
Gork
that Dork was poorer than me. Right before we got on here, he was telling me about how he filled up at the gas tank on Friday in anticipation of something that might happen to raise oil prices. And I was like, you pay attention to how much you pay at the gas pump?
Yes, I do. I wanted to save that 10%, 15%.
So poor. It's actually kind of disgusting that we allow him to be here.
I don't want to hear it, Jay Fresh. I full ported into a put on Thursday or on Friday, okay, and I made some money on it.
Good
All right.
job. Yeah, no, I'm kidding.
I bought one put for $800, and I was like, this is pretty much my entire port.
Speaking of vol, how do we feel about that?
It's gonna go up.
Is it?
Yeah, I mean, it's gonna be up on Monday at least, but it's probably I don't know what's gonna happen later on in the week, but I'm betting on Monday we're gonna probably open the day with vol at least around where it was the close, like 1750 is my guess. But
Yeah,
you know,
but
by
that would
Wednesday,
be technically a decline in vol because of the weekend effect.
Oh, right.
You really needed to be up at like 1950 at open for it to be consistent.
What, to be flat?
Yeah.
Well, I don't think it's going to open there. I think it's going to open like flat to the number.
Yeah,
Unless
so
Israel
that would be slightly down, but not terribly slightly down.
Yeah, I don't think. I mean, well, there's just no telling, right? Like with the shit that's going on, you know, Israel did their thing. They blew up the consulate. Iran did their thing. They shot a bunch of rockets at Israel. Israel's saying they're gonna have some sort of unprecedented response or something. You know, either we're gonna get, you know, Israel's gonna do their thing, and then we kind of just have to wait and see what happens, right? Does it escalate? Do we go to diplomacy? You know, there's no telling, right? There's no way to know. Like, there's no way to predict human behavior, right?
What if I made the crazy statement that said that what we're seeing in vol, the effect of like all this Israel stuff over the weekend was maybe like a 20% effect.
What do you mean? Please elaborate.
So really all we've really seen with vol is sort of a continuation of a much longer trend that really started back in the end of November timeframe, where everybody piles into vol, short vol, so much so that volatility the volatility of vol starts to rise. And so you can see from from like November 22nd to around like December, the end of December. So for almost like a month, there's just like no volatility. And then you start to see significant oscillations in volatility, and those oscillations start to increase all the way, through Feb. And every single time that it gets shorted back down, volatility never gets suppressed quite as much as the last time. And so you kind of have this increasing vol of volatility because so many people are piling into that trade, and it's so levered that it's just naturally becoming unstable because of its high leverage. And so then we're now getting to this point where they had just tried to do another round of extreme shorting right after March OPEX, which got us to our highs, our all-time highs in the end of March, kind of very beginning of April timeframe, and then now that short is unwinding again with this vol increasing, and so then right at like the tail end, so maybe they were prepared at the end of this last week. They were prepared to start shorting it again to do another cycle. And then all this Israel stuff happened, which sort of pushed vol down a little bit and delayed that process. But the process more or less has still continued the same for the last, 4 or 5 months. And so nothing that I've seen really shows that beyond people just pricing up risk and maybe people buying a little bit more insurance, the short vol hasn't really capitulated in any real sense. I mean, the VIX, the last time VIX blasted this high, we went from like, we went from 4,400 to 4,100. So we dropped $300. The last time VIX did a move like this, and then this time we went, from like 4,250 to 4,115, like half of that, less than half. So short vol is still very much entrenched, and I get the feeling they're going to want to get their foothold back next week. And so, I mean, unless something else drops that kind of just 1-2 punches them by open, I think they're just going to short the hell out of vol.
But so I don't disagree with your TA on the VIX having it
I'm gonna kill
developing
you.
a
That was
megaphone.
not TA. I didn't
It's
call
a
it a
megaphone.
megaphone.
You called it a
No.
megaphone, pretty much. It's a megaphone. Uh, giving you shit aside, it all depends on how much. Like we're seeing demand for vol kind of come back. That's the thing is for the last year, right? The amount of like demand they had to fight through was pretty minimal, right? Like there's not very many people wanting to pick up insurance. If anything, they were jumping in on the short vol train, right? But this Israel Iran thing, I think more so than anything else, is going to it gives off the idea that there still are risks present in this globe and in the global market, right? Especially commodities, right?
Yeah.
So that's where I think that we may see a little more demand for vol than we've seen over the past, 12 months. And not only are we seeing risk in commodities from, these geopolitical tensions and the stuff, we're also seeing a rise in risk with the Treasury yield bear steepening again.
Oh God.
That's a really big risk.
I'm gonna kill you, dude. You gotta say the word steepener every single time we talk, literally.
He's
Yeah,
just
no, I
doing it
mean,
on purpose at this point.
A
I
little bit,
know.
but
I
it's a
will
great way.
say, I will say, yeah. I mean, I don't think you're wrong. I just think I'm assigning about a 20% effect to that. Have that right now on vol. Um, I think by and large, most people are just buying more insurance because the market's gone up so much. So there's more to insure, right? There's more gains to insure. And yeah, I mean, if anything, the geopolitical conflict, sure, they can accelerate things, they can, speed things up. But I think this is a longer process that's been ongoing.
I think you're right. I don't think you're wrong. I
Well, there we
think that
go.
the winds are changing. They're getting more unpredictable.
Yeah, and the
You know,
question is, are the people who are being irresponsible and just double fisting short ball, are they going to try to get out ahead or even, or who knows what their books look like right now at close on Friday, but or are they going to try to stick it out because they've won for so long that they're full of hubris and complacency? I don't know. We'll see.
I think that short vol tries to slowly back out. As risk goes up, they back out a little bit, and that's why we've seen vol become more and more unpinned. And the market really only does those strong reversals, like on that absolutely shitty Treasury auction.
Yeah.
Like we only saw the market really turn around when it started putting longer term options at risk.
Well, also when we get these bigger moves involved that aren't immediately ground back into the dirt, you then massively increase the risk of continuing to sell vol, right? So I mean, you always have that kind of specter in the background that, like, VIX is above 16, things are a little more hairy, and that's going to keep a lot of short vol off the table, right? Remember, like, we've kind of, I think we've talked about that a bunch, but like, you've
Yeah, but so far we
you've got
haven't
that
seen that. Yeah.
exponential returns on long vol, but diminishing returns on short.
Yeah, so there's, I mean, still a lot of people, all in on short vol, even at, VIX 13. But yeah, there's still other people as well who are looking at this spike in vol ready to sell even more of it, who are, getting thirsty. And I mean, even if you look at, August to November, when we just kind of like chopped all the way down to 4,100 from 4,600 ish. Like short vol just dug in the whole time, and VIX got all the way up to like 21, and they just dug in their heels and just kept selling more. And then that was part of like that snap backwards in November, once everybody's interest rate expectations shifted. It priced up all the sold calls, which like blew out, everybody who had sold them all, that just blew them out, and they had to close upward, and so it just shot straight up.
Yeah,
And
that's
something like that could still happen here because we haven't really seen. I mean, we're seeing basically the same thing play out here that we started to see in August, where short vol just digs in, and if they can hold it out, you could see another slingshot. Now, how low it's going to go, I don't know, but I don't expect anything to go straight down at this point, unless they give up, unless somebody gets blown out. And then it just sets off a chain reaction. But otherwise, yeah, it's a dangerous place to be if you're trying to bet short. That's for sure.
I don't disagree, but the difference between you're drawing a parallel, but the difference now is that we don't really have any sort of a strong case for more rate cuts. We really don't. And the Treasury market is sort of telling you a similar story. I posted a chart, Kirk, in the chat for this room.
Yeah.
And we looked at it last week. But there's like a spot on the chart that I marked that JFresh is talking about, and we're seeing a similar sort of setup right now in the bond market, right? The biggest difference I see was back then, we had inflation, it was cooling, right? It has kind of flattened off a bit, but it was cooling. And now we're at a point where it needs to keep going down if we want, to get the rate cuts, right? And it's not going down. And in response, the Treasury market has legged up a couple times. And so, financial conditions are starting to tighten. And so even if you do want to short a bunch of vol, the cost of doing so is going up. That blue line is the 1 year, right? And so, the cost premium for margin, doing things like shorting vol, stuff like that, is going to go up. And people will be more reticent to take on that risk, especially if vol remains unpinned. And we do need some sort of catalyst like what happened back then, which was, it's time for rate cuts. The rates are going to get cut. Everything's getting cut, back to zero, stonks to the moon. If we don't get something like that, we're just going to chop here. Like that's I mean, until we get like every inflation report at this point becomes super important to show any sort of progress towards the 2% target. The Fed rhetoric quickly U-turned, right? From we got these cuts and it's all about the cuts and we've topped and it's cuts, and now it's like we may need to raise, we might want to cut, we don't know what the fuck we're doing, we're a bunch of morons. And the market's sort of reflecting that same sentiment right now, saying we don't know the fuck's going to happen, so we may as well start to lean more into short-term liquidity, let the long end work its way up, because we're going to want those premiums. If inflation stays elevated, they're going to want to make sure that their long-term, government debt holdings are yielding more than that inflation, and enough so that it makes sense to buy them.
Yeah, but I mean that's the thing though, is that, and this is, I think, I could be completely wrong, and if I am, I hope somebody who knows better can correct me, but I get this sense that people in the bond market are so used to pricing bonds based on inflation and then economic expectations from long running historical, the economy is probably going to grow 1 to 2% a year, and inflation should be growing 2% a year-ish. So that puts you at a long run rate of 4 to 5%. So let's call it 4 to 4.5 or so, which is kind of where the 10 years been, right? But I feel like they're all completely discounting the role of government deficits, which there's a great reason to, right? Because for pretty much since the 40s, the deficit has been, yeah, sure, it's been rising, but it's still been a pretty small amount of our total GDP, at least the growth of the deficit. So in that sense, it was still sort of a round off error, or it was, maybe contributed a few percent here or there, but it was never big enough to really need to incorporate that into your understanding of, where rates are headed. But now we're in a situation where our deficits, like the absolute value of our deficits, are growing faster than our in GDP, which I think is significant. And I think when you get to that point, you have to start pricing in the fact that, our debt is growing faster than our economy. And if you think about it from a supply and demand standpoint, I mean, you just have to expect that if the debt's going to grow at that rate, then you should, if the debt's growing at like 6 to 10% of NGDP, or sorry, of NGDP every year, and there's no sign of it slowing down or stopping. There's no indication that the government's going to get their act together and reverse this. Should you really be buying 10-year treasuries under 6% or higher? I don't know.
Yeah,
Like my
it's
gut
it's a,
says no, don't.
it's a giant question mark. I mean, it's such a counterintuitive thing that we see happening right now. Like, is it not just so confusing that interest rates got jacked to the tits, and then the government in response said, it's like if your APR on your credit card went to 50%, and you're like, yeah, now I'm going to spend on the credit card even harder.
Well, it's like they always say, don't fight the Fed. Well, the U.S. government apparently is the one entity that can effectively fight the Fed, right? Because it is the one thing that has more power than the Fed, and that's
Well,
exactly what they're doing.
so instead of bailing out GSIBs, we're just going to bail out the Treasury, you think?
Um, I
Because
hope not,
The TGA is
but
going to start looking like a shit coin pretty soon.
I mean, what the Federal Reserve I think needs to do, if they were actually independent and they actually had a spine, um, they would essentially be forcing. They would not be accommodative of this debt growth. They would say that's fine if the federal government wants to grow this debt, they can, but they're going to have to pay for it, right? They're going to have to suffer from it, right? And of course, that's a risk because that is inflationary as well. Because the interest rates would become, the amount of interest they'd be paying out would be so inflationary, but at least it would create pain for the federal government who's trying to please taxpayers, and if they're just paying out interest and that all their expenditures are interest and not on things that taxpayers want, like social programs and infrastructure, things like that, that would put a that would create, I think, a dampening effect on their spending to say, hey, we can't spend or we're going to get higher rates and people are going to get angry and vote us out. But when you have this accommodative policy where we're going to do whatever we can, regardless of how much the Congress is spending, we're going to do whatever we can to make sure that rates don't get too high and blow people up and cause chaos. That just encourages more spending, and the problem just keeps getting worse. And so so the question of are they gonna buy Yellen's debt off of her? Eventually, they're gonna either have to, or they're gonna have to put their foot down and say, we simply cannot.
Dude, and this is what, like, I've been sort of warning about, is this exact situation where if we reach that point, right, either the Fed does step in, right, and become the buyer of these treasuries, which would be just the weirdest reach around in existence, or yields go up a lot, regardless of what the Fed does. We get the bear steepener like immediately if the Treasury can no longer issue enough bonds to maintain these deficits.
Oh, the Treasury can always issue enough bonds. It's about what rate,
Exactly, that's what I mean.
right?
Yeah, that's what I mean.
Yeah, but yeah, if the Federal Reserve starts buying debt, in size, I know they've been like dabbling with some repurchasing shit, but it's been real small. But if they start buying debt, I mean, that's risk on. That's like, you've got to find somewhere to turn your money into something else because your money is going to be valueless.
Oh yeah, for sure. They actually, in their last FOMC minutes, I noted something in the SPX chat that I found interesting. A lot of the participants are in agreement that they should keep winding down their MBS and CMBS holdings as usual, but they want to slow down their unwinding of their treasury balance.
Yeah, which is wild to me. I mean, that just shows that they have an unwillingness to do what needs to be done, which is force people to pay for the risk that they're taking on, right? They're effectively insuring the federal government at this point to some degree, which
Yeah.
is not a great look.
Nope.
And this is just like this is also psychology as well, right? I mean, you can there's probably 9 out of 10 people that would hear me talking about this as an issue would just scoff and say, okay, it hasn't been an issue for the last 70 years, but now it's an issue. Okay, sure, whatever. right? There's just like this complacency of nothing bad has happened yet, therefore there's no reason for alarm. You're just being alarmist. And yeah, sure, I'm not saying, something's going to hit the fan tomorrow, but it's never a good feeling when you understand the path that we're on is not a good path, even if it's going to take a long time. You don't want to be on a bad path, right? That's very demoralizing for everybody involved. And it's just going to multiply pain later. So there's still value in talking about it now, I think, because then we can start having discussions about what's a better path and how do we get on it. So, but
It's at this point, it's such a tough problem to try to solve, right? We've gotten it so bad, right, that it's like if your kid dabbles around with some hardcore drugs, right? You know you can do all kinds of things to get them to not do those anymore. But like it's like almost like you just ignore your kid for like 10 years and you come say hi and check in on them and they're just fucking strung out on heroin on the subway nodding off, right? You're like,
can
okay,
you
how do I
change that from heroin to zero DTEs? I think that would resonate more with this audience.
but we're talking about the government, so it's not, I mean, I guess it is zero DTEs, but it's not, right? It's the government and deficits, right, that they're just so drunk on and so addicted to. And it's gotten so bad that the only real way to try to get back to the straight and narrow is like full on detox, right?
I mean, a
Yeah,
strong Fed, if they ever chose to be strong, could really influence that detox, right? But I mean, I think the chances of that, at least under current leadership and their current like dogma, are pretty slim.
Yeah.
I mean, like, I fully expect the Fed to cut rates before they raise them above, the long run inflation average, um, which is, the weaker of the two takes, right? It's going to cause far more undue complications than if they would just raise rates to be prohibitive, right? Um, but the only way I see them doing that is if inflation really is just so out of control that the average person already can't survive, right?
I mean, we could be getting dangerously close to that already.
Probably. If you do like the old calc for inflation, we're at like 18%. Uh so I mean,
Yeah.
shit's really
Which
bad.
didn't Larry Fink came out and said the quiet part out loud, didn't
No,
he, last week?
I don't know. I didn't
Yeah,
hear anything
Larry
about
Fink
Larry.
was. I think he was on CNBC or so, or maybe he was in an investor letter or something. He said the exact same thing, which if you won't listen to the other people who are saying that, you can listen to your Bitcoin god.
Oh my God. I love that whole saga of Bitcoin when the ETFs came out and stuff. Like, that meme I made is so exactly what happened. Where it's
I
like
don't I don't remember your meme. Do you have it? Can you repost it?
it's probably on my Twitter somewhere, but basically it's the Wojak saying, there's like a bank over there. It's like, fuck off, be your own bank with BTC. And then there's an article of the BTC ETF. He's like, OMG, yes, Bitcoin to the moon.
Yeah,
I
yeah.
will say, in line with what you guys are saying here, is that there is kind of a contest that's going to occur here, and it already is, between passive fund flows, right? Even actively managed fund flows and short vol, and they become contentious during this period, much as they did from August to October, because the forward yield is going to contract. Like, the forward yield on the S&P is going to contract in line with tightening financial conditions, right? And so you kind of get a knock-on effect to the downside, where those passive fund flow investors and those managers are going to be pulling money back because there is not an attractive forward yield on the S&P, and it's not until financial conditions ease that those become attractive again, right?
Yeah.
Yeah, yeah. I
And
mean,
so, I mean, we had rapid easing of those financial conditions in November, December. And so a lot of that move to the upside got backed with a lot of passive fund flow. It got backed with, a lot of investment into actively managed funds as well. But now we're going to see that start to contract with the rising yields, as those treasuries start to become more attractive than buying the stocks. And here way more so than in July, right? Because prices are even so much higher than that. I mean, we're what from like July's high, we're up. Jesus fucking Christ. Um it's so insane. From July's high, we're up another
Are we looking at GME right now?
right? We're up another 11. We're up 11% from how high we were in July, right? And investors are going to be not only way more willing to sell here than they were in July, but they're willing to sell bags from back in 2021 here, right? So you have this range at least back to like the top of like December 2021 where, everybody's just massively profitable on long-term buy and hold. And when they start to get spooked, that's really where you can get the kind of sell-off that changes, market dynamics over a 6, 9, 12 month period. That's where you can get a bear market, right? Because everyone's up. So why not take the
yeah,
profits if things are
that's kind of
declining?
what I was saying with Dork. Like, I think we're in a period right now where people are just more willing to insure their winnings, which is fighting against short vol. And eventually, I mean, as that insurance continues to whittle down their winnings, eventually they're just going to take them.
Yep. I think we're, and it's an interesting point in time right now. Things are, we would, like, everyone thought things would be cooling down by now, but it seems that they're staying warm, and in fact they are warming up.
Did everybody think that, Dork?
Everybody who spoke on CNN's Squawk Box, yeah.
Yeah, fair.
I mean, everybody for all of last year and the beginning of this year was on the full bull train towards, Russia Ukraine is going to reach a resolution soon. Inflation's coming down. The Fed's going to cut rates. Everything is awesome. This rally is going to continue until SPX hits, $90,000. And
Dollar reduce. At that point,
dollar
they would be
reduced.
called
Sorry, yeah,
dollar reduce.
yeah, monopoly dollars. And so, but what happened over the weekend, and even just over the last week, right? And everyone thought that Israel invading Gaza was just going to be Israel curb stomping a bunch of poor people, which it turned out to be. But then Iran got pissed off after Israel blew up their consulate, and now uh, it's that has a potential to heat up pretty quickly. And I think that people going into this week are going to be a little more aware of how quickly risks and base costs for commodities and stuff can change, right?
Yeah,
Like
and
if
I will say,
like, this escalates, inflation
also,
went back to 4%.
yeah, and I will say also counter to that, the other headwind is, the AI narrative. We've talked about this before many times, but the AI narrative is kind of starting to rapidly deteriorate, even faster than I really envisioned. I mean, I kind of thought we had until the summer before people started getting really negative about, or much more critical. I wouldn't say that people are negative about it yet, but getting much more critical of these companies and these products and what they're going to do for us. But that's happening quite rapidly now. I mean, we're seeing a lot of a lot of news outlets publishing things about, unmet expectations, fear of security, questions about what are the profit models surrounding these things, and then reporting that none of these companies have profit models for any of it. It's really, I mean, there was a new thing I read this week. Well, okay, so this is unconfirmed. I was trying, one of the an AI researcher on Twitter was talking about a podcast they had heard where somebody was discussing how Anthropic AI also does not have a business model other than if we build it, somebody will use it for something. And I asked them where that podcast was so I could get more details, but they didn't respond. So that's maybe not a confirmed thing, but that would be another example in combination with Stable Diffusion AI, the company that made Stability or whatever. I don't know what it's called, some image generator. They also didn't have a business model, even after VCs pumped hundreds of millions of dollars into them and valued them at billions of dollars. No business model at all. And so these kinds of things are coming out quite quickly, and that's showing that, I mean, in the general public, and especially I think with investors who have the ear of these journalists, I mean, they're getting sour real quick. And so if you combine that with all the things that you're talking about, where people want to hedge more geopolitical risk, et cetera, you really start to see a picture where, at this point, the only thing that could save it are stellar earnings, which we're in earnings season, and we'll see how it goes. 6% of the S&P is reported earnings, and so far it looks okay, but it's 6%, right? I mean, we're still at a point where it can wildly oscillate. So yeah, I mean, we're kind of in this period where anything can happen. And what do you do when anything can happen? You hedge. What do you do if you hedge and short vol is very entrenched? You get some fun time.
Yep.
And here's, I mean, this is also fun too. From we've talked about this as well before about trying to use these massive signals we're getting from COVID to test some monetary theories. I was just thinking about this today. It's like, remember when the Fed was saying for it was at least a year, probably 1.5 years, they kept talking about the long and variable lags, right? They're
Yeah.
not talking about those anymore. And I think
No.
it's because we've run out of runway for that to be a plausible scenario, that it was just a lagged effect. And so
Yeah.
now I think the market is kind of coming into this realization the Fed has no idea what the fuck they're talking about, that all their theories are bullshit and untested.
The bond
And
market is, right? I mean, the bond
yeah,
market is absolutely in disagreement with Fed policy.
yeah.
Like
And
the
so we're
bond
kind of in
after
this,
that last meeting where J Powell was just like, I don't know, the bond
well, I
market
mean,
was like, okay, well, we do. um,
yeah, up in rates. Yeah.
yeah,
Yeah, yeah. Yes. Yeah, I mean, I think everybody knows that bonds should be priced higher, uh, if we're being honest with ourselves.
I think they're still exceptionally cheap. I mean,
Sorry, I meant rates.
well,
Rates should
yeah,
be priced higher.
yeah.
The bonds are, yeah,
Yeah,
yeah.
bonds are cheap, but yeah, I mean they should be cheaper. Rates at least at the top end of the curve should be significantly higher. I mean, there's so much issuance and no buyers, right? And we're really driving those bid to covers into the dirt at this point. Um, and even foreign central banks are now turning to gold more than UST, right? Because we've done so much issuance that they're losing faith in the stability of the dollar, um, which is understandable with Dixie at 106 and everybody else's currencies getting crushed into the dirt because we're number one, right? Like,
Yeah. Well, I
um,
mean, can anybody point to a single monetary theory or idea that's mooring us in place, that's grounding us? I mean, we're pretty much stranded at sea at this point in the choppy waves, and nobody knows which way the shore is.
Yeah, no, you're right. It's
I mean, sure, like supply and demand, we all understand that, but
see that
but like
I thought that was the most bearish thing that came out on Friday. Right? Not Diamond, not the bank earnings, not the fact that they can't lend anybody fucking money. None of that. I really thought that the most bearish thing that came out Friday was import prices went up. Because that
go on.
means all of our exported inflation we've exported back to ourselves. Right? I mean, like we've finally come full circle, and now now we're on trend to start importing inflation back into the US. And that's terrible, right? Especially with the consumer already kind of overwhelmed and definitely overextended. Wages aren't keeping up. I think that trend is pretty obvious at this point. Focus has been on corporate profitability and not labor retention, which means that people are just simply going to have less buying power, and I don't think we could withstand our inflation coming back home to roost.
No, not at all.
Yeah,
Well, like, I mean, even with the geopolitical tensions, I mean, if oil goes up, right? I mean, good thing we refilled the SPR between, $60 and $80.
I mean, I'm
So
sorry, but
that,
that was one of the greatest oil trades in history. Say what you will about Biden, but he sold that shit at the top. Like that was pretty impressive.
yeah, but now he might be forcing himself to eventually buy it at the top too.
True.
I just,
I don't know. We have like the US has a lot of ability to control oil prices at a global scale. And so, oil might be ticking up, there might be speculation, there might be geopolitical risk and risk premia priced in, right? But ultimately, if we really want to, we can ramp up production to create, a deep enough trench in oil that we can refill.
yeah, that's true.
Yeah.
It does. We do have the advantage of having the largest oil reserves now, which is fun.
Yeah, and also the infrastructure to just tap them at will, right? Like we've really built out um like oil drilling in the Permian Basin, and then like north of the Permian Basin, I forget what that one's called, but there's been a shitload of expansion there too. Um like the one that goes up through like Utah into like Idaho, Wyoming. I forget the name of it.
I think it's called
Um
the Ziblet Basin.
huh?
I think it's called the Ziblet Basin.
Zibla
Mm.
Basin.
Yeah.
Well, yeah, I mean that's definitely
Dork, don't give away the secret of the Ziblet.
something that we have in our back pocket. I mean, it's definitely better than a more stable base for production than any of the OPEC countries currently have, right? Saudi Arabia has pulled back production, which means that they have to shut down active wells, right? Because otherwise they get too much surplus, or they're trying to figure out where to store all the surplus still. Brazil's got more fucking problems with its oil industry than I can even get into. In the last like 3 weeks, PBR's CEO has been like ousted, replaced, ousted again, denied meetings with Lula, and then like put back into position. But now they're going after one of the other board members. So that whole thing is fucked. Argentina's fucked. Venezuela's fucked. Russia's got its obvious problems, and then constant conflict and drone attacks on refineries and oil pipelines, right? And then you've got Iran, which is about to become a hotbed issue, right? And so it's just like all of the other major oil producing countries are just in a massive amount of turmoil, and we've just got plenty of infrastructure ready to go in the Permian Basin. So I would not underestimate our control over oil prices, but obviously that's not something we want to tap into. It's not strategically advantageous for us to make that move in the long term. And so, things will probably coast along at the current rate, and gas prices will probably continue to rise until the summer, maybe into the end of the year, depending on how things look then. EIA's projections are super fucking bullish. Like, we're gonna have plenty of oil. It's not a problem. OPEC's production estimates are way below the demand, right? And so we got half of the oil industry saying everything's going to be fine. We got the other half of the oil industry saying that we're going to have massive supply deficits by the end of the year. And I feel like the truth is probably in the middle, which means that we're going to have some supply deficits into the end of the year, which means either flat oil costs like where they're at now, or substantially higher.
Yeah, I mean, I think it would. I don't think that you can fully discount the effect of draining the SPR had on disinflation. Back in 2022, 2023, it coincided quite well. And obviously, if you're interested in trying to get inflation down, the cost of oil's in everything, right? So we don't really have that lever at our disposal anymore. So that's something to keep in mind. I mean, if we really wanted to ramp up production here, we're going to have to incentivize people monetarily, which is the opposite of what we should be doing if we're trying to tamp down inflation.
Yeah. Well, I mean, we hope that rising oil prices will create the incentive, right? Like, if oil prices are continually at 85 to 90 a barrel, that's going to attract increased production.
Sure, yeah.
So that should be the, and that's why you don't want to go the other route where you bury oil prices, because then you really do have to financially incentivize the build out of that infrastructure. And that's almost more expensive than just letting it run its course.
The thing is that all these things, like even ramping up production, that takes a while. I mean, if let's just say this Mideast stuff, boils over and expands to include other countries than Iran and Syria, or sorry, Iran and Israel. Even in that eventuality, oil prices could go up dramatically and too quickly for like a production ramp up to have much of an effect, even if the incentive is very strong, right?
Yeah.
So, the only options the U.S. has, in the face of that is either dump SPR or accept that we're going to get another, spike in inflation. I mean, it depends on if do you want to hold on to those oil reserves because they're more valuable, right? Like, is the risk long term enough that you don't want to try to damp that effect on oil prices, or do you just not give a fuck and you just fucking you fade the top again, like Biden did the last time?
What? But we don't have any oil reserves to do that.
We got a little bit.
Yeah.
We got I know what the implications are of that, but I'm not going to underestimate the short-sightedness of our current leadership either.
Well, I mean, my point was to the idea that that we can ramp up production far faster than usual, but yes, it does have a lagged effect.
Yeah, in the short term, we are going to get some stuff happening. I mean, but that you're right.
You're just trying to get me to buy more HAL, and fine, I will.
It's true. I did buy a HAL call, and I'm hoping that your extreme wealth that you have, as Larry Fink's younger cousin twice removed, and also part-time neck rubber.
Foot. It's foot. Yeah, I graduated. Neck's an intern position.
Oh, I see. So now you're the resident foot rubber. Shit.
Gaff got fired.
Oh, fuck. I feel bad for him.
He did?
Yeah,
Yeah, from various things,
he's doing like
position.
risk management now. He
That
wasn't even on
sucks.
the yacht last weekend.
Dude.
Yeah, I don't. I tried to reach out, but yeah, I mean, he's just a roller coaster
Hopefully
of
he doesn't.
emotions right
He doesn't
now.
have a company phone anymore. How are you going to get a hold of him? Just wander the streets shouting gaff till he finally looks. Or no, you just got to go through all the kavas in New York and see if you can find him.
Yeah, that's what I was gonna do. Is just start spot checking Kavas and seeing if he's there. Offer him a meatball.
uh, yeah, no, this next week is gonna be like like the one thing that I'm sure of is that this next week is gonna be really exciting. You know, developments generally. I mean, exciting is one word for it, right? I'm not saying like I'm like all, you know, happy about the promise of or the potential for human suffering, but the market, right, in the face of real human suffering becoming an eventuality in a new way that is not expected, generally leads to increased volatility, right?
Yep,
And with increased volatility comes opportunity.
yep, I agree.
So I have no idea which way it's going to shake out, and you know, there's no way to know by like things can change by the end of Monday or by the end of Tuesday, right, and just completely change the course of how things are going. But
So I mean, yeah, let's get into the market this week because I have to go pretty soon.
Yeah.
I've got some stuff to do today, but you know, we're coming up on SLD, which hasn't mattered in a really long time, right? But this is the first time during an SLD that we're approaching it under GN since October.
I see.
Yeah, which is, you know, if my theories about SLD are correct and there's no market maker to absorb the sell off in liquidity as we have seen over the last 6 months, um, this could be very bearish. I mean, I think SLD is like, yeah, people are like, it's a myth, it's real, it's got enough historic evidence that there's definitely very strong positive correlation, right? And I would say that a lot of that evidence, you know, we were very close to GN or at GN or under it, where it has, you know, a kind of a negative effect, and in periods where we were above GN, the effect is lessened, right? And so being below GN, you know, and people need to sell because they need to, and we know margin requirements are definitely way up because VIX is fucking rocketing, right? So I think there's a chance that when we move into that liquidity sell off, that if we're still below GN, it could have its old effect, the effect that we remember so fondly from 2022, right? um, because yeah, I mean the market maker is going to be selling right alongside that, and you know that's going to then additionally increase margin requirements for anybody short vol, which appears to be still everyone. And so you know those broad, it's very reflexive, right?
Wait, you don't you think that record Vega risk on the SPX indicates that people are all still very short vol?
Yeah, yeah, I do.
Mm, yeah, I do too.
Oh, okay. Yeah, I was thinking that yeah, that might not be such a great thing. Market falling into historically large numbers of short puts.
Yeah, it's gonna be. I also just kind of want to see it happen.
Yeah, yeah, but it's also like it's also I mean like that's probably how most crash scenarios happen, right? Everyone's
Yeah, I
peak
understand what I'm
elation right
asking
before they
for.
all get yeah, I know. Peak elation before they all get boned, but here we are. So we'll see how it goes. I mean, uh not a lot of changes in Delta over the last week, so we're not getting like the bull side's not very strong. Gamma keeps dipping a little bit more and more negative each day. Um, people are still selling puts, so they're fighting, but it's not very effective, right? And you know, I would say the biggest difference from like back in August, September, October to now is that, you know, A, short vol's way higher, B, it's way closer to the money. You know, back then they were selling like a lot of longer dated puts way the fuck out of the money. And
Yeah.
with this massive pump, over the last 6 months, they've really gotten. I mean, they've gotten to the point where they were, you know, many times selling puts in the money before we'd even
Yep.
broken those levels, right? And so,
Dang.
on the downside, everything's just way closer to spot. I mean, 5,000's got those big synthetic longs. We've got, you know, the JPM color, and delta neutral basically floating right around the same level to the downside, and that JPM color is picking up tons of delta with the increase in vol, right? Because they just rolled it at the end of March.
Mhm.
So as IV ticks up, the delta of those contracts increases, and so that's, you know, that's creating drag. You've got all these like short puts that are already underwater that are only getting more underwater, which creates, you know, even more negative delta. Um, and all of this is, you know, we're not. I would say we're not at the point where we can't bounce yet. We're not like at the heat death of the market, but we're really close. Like,
Yeah, we are really close. I tend to agree with you. I think they're gonna fight, and I think for that reason, my line is flat this week.
fucking bastard. I knew you were
God
gonna
damn
do it. You
it,
son
Fresh.
of a bitch, motherfucker.
I mean, I was looking at the economic calendar too, and there's just nothing that really jumped out at me. I mean, there's like a 20-year auction
The biggest
on.
one for me is retail sales. And
Yeah, that could
maybe
be a
I
big
don't
one.
think the 20-year auction matters much. Like, everyone expects the bid to cover to be shit. If it prints a tail, which it probably will, yeah. I would say that Fed speakers and like retail sales. But there's a lot of international shit this week, right? Tonight
Yeah,
we have another PBOC decision out of for the short-term lending facility out of China. Um and yuan has already been very unstable against the dollar recently, right? And so if they choose not to lower the finance cost in that lending facility, they may choose to try to pin yuan again. And if they do that, that's going to put downward pressure on the top end of the curve, which loosens up financial conditions modestly. Um, that was something that we've been experiencing at the peaks ever since like OPEX, right? It was like China was really trying to push the yuan back into their target range, and that was kind of keeping yields from skyrocketing. They gave up a little, but this decision's impactful enough that it could push yuan to like 730, 735, right? And if that's the case, they may really have to step in. Otherwise, oh boy. Right? Like, I mean, and yen's almost at that point too. So there,
yeah.
and euro's falling pretty far. It's at like 106. So, you know,
What'd you say the cutoff line, the line, the last final actual line not to cross for the yen was like
it's
156.
like 160.
Yeah,
But
that's very anticlimactic.
it gets very dangerous around 155 because you're like one currency like tail event away from your currency collapsing, right?
Yeah, that's fun.
Yeah. But I do think, due to the pressure, and now that there's no longer a yield curve, that there's a modest chance that Japan raises rates here in April. And that's going to pressure the Fed to raise rates because that's going to increase our imported inflation even more.
Yeah, it's wild. But yeah, I mean, so I say flat, but I think it's gonna be. quite a violent flat. So obviously, I mean, I'm kind of the aspersion that I think they're going to push back. Short ball's going to push back Monday, Tuesday to the extent that they can. And so I see a bounce coming. Again, I really hope that they just get squeezed out and that they hopefully learn a lesson. But I don't think we're at that point yet. Maybe we will if somebody shoots another missile or something. But
we're gonna do some like choppy flat or just a flat line.
yeah, I'll let you do. My only requirements is that it basically starts and ends at the same point, and it can't move more than $150 up or down.
All right, here.
So we can go, yeah, we can go wild here. Yeah, actually, I like this. Yeah. Well, don't think too much because then you're putting your own thoughts into it.
That's true. I'm just trying to make it end at the same price.
That's good.
There we
Yeah,
go.
just end it. Yeah, I like that because it goes up, and then something happens, and it swings back, and then they fight again. And this week will just be a battle between short ball and the universe.
All right, Dorcas.
Okay. How do I want to play this one? I think I have an idea. Okay, so open at 5,100
Okay.
and then close at on Monday at 50.85.
50.85.
Correct.
Okay.
Tuesday open 50.85. Close Tuesday at 51.25.
Ooh.
So then Wednesday, we'll just keep opening flat. It makes life easy. We close Wednesday at. Okay, so we close Wednesday at 50.75.
51.75.
No, 50.75.
Oh. Ooh. Flipping the script. This is not the way I thought you were going. Okay.
And then, so then we open 50.75, close at 5,000.
What?
Dork's full bear right now. This is ridiculous.
Okay, and then we close Friday at 50.45.
Okay.
Yeah, I agree with Bob. If we go near 5K, we're going into a black hole.
Yeah. All right. Yeah, so I mean I can't say I'm not bearish. I think maybe open 51.11, bounce back over the next 3 days to 51.75. Then I think Thursday down, Friday down, like that. Mine's pretty simple. Okay, that's J French, Dork, Pink.
All right, here, let me go ahead and get ready to do the quant dot plot. There we go. Quant dot plot.
Wait, hold
Ready
on.
to
Let me move this over. There we
Ah,
go.
yes, you need those as well. All right.
You know what's not fair? I use all of my support resistances to back your guys. Like, you guys are just using my chart.
I'm just coming up with numbers. 5,000 is really like, in terms of big resistances, 5,100. I basically am saying we're going to fail the 5,100 resist
Yeah.
or support, and then we're just going to fall straight down to the 5K support because it's so fucking huge.
I
And
feel
then we're
like
just
if we
going to
make,
bounce.
I'll tell you right now, if we make that fall, we're not stopping. The delta on the long puts is going to fucking drag us into oblivion.
I think we have a chance to bounce at 5,000 if this happens.
All
Just
right.
because there's so much leverage packed into that strike that
Yeah.
everyone's going to start repositioning around
You
it.
don't think those people will close those fucking synthetic longs?
They may. If they do, then yeah, we're going straight into the black
They're
hole.
so big. There's like 800,000 contracts on each side there. It's ridiculous.
That's crazy.
Yeah.
Yeah, I'm trying to see if I can pull up some info on dates and strikes that are meaningful here.
Why is Powell talking Tuesday? Oh shit, is he? That changes everything.
Not for me, it
Ugh.
doesn't.
Is he talking on Tuesday?
What the fuck is he? I don't see anything on Tuesday for Powell.
Go to the Googles. Powell speech.
Hold on. That's the
Calendar.
16th, right?
Let's see. Federal Reserve Board calendar. Tuesday the 16th. Vice Chair Philip Jefferson.
Oh shit.
Discussion with Jerome H. Powell. Moderated discussion with Tiff Macklem, Governor of the Bank of Canada, at the Washington Forum on the Canadian Economy in Washington, D.C. Of course, they'd have a forum on the Canadian economy in America.
Yeah.
Why would anybody
Well,
go to Canada?
I mean, it's not even real. So, are they just commenting on the Canadian economy? Because that seems like the least important thing that's ever happened economically in the history of economics. Like, if Dork was like, I lost $1 at the club last night, I'd be like, that's impactful compared to this.
That's Canadian.
Yeah. Like the spending spurred from the finding of Dork's $1 would have more of an impact than the entire economy of Canada.
Ouch. Tell us how you really feel.
Damn. All the Canadians in here just got wrecked.
Canada's
Oh,
just a US subsidiary, all right? They already know. That's why their houses cost 5 million fake dollars.
Yeah, we call those dollary dues.
That's Australia. Hold on, I'll be right back.
All right, so I'm pulling up some data here. What do we got? I'm looking at SPX weekly contracts. Oh, I wish I could show this on the stream. There's just like this beautiful little exponential tail going from like this next week out to the end of May. It's just like this perfectly, oh my gosh. I could draw a line through it. Someone's just perfectly sold this just exponential decay all the way out in both mostly puts obviously, but also calls.
Or just like are you talking by expiry?
Yeah.
Oh man, so it's just super front loaded. That's interesting.
There's actually it looks like a lot of people did buy insurance that expires tomorrow. There's actually a lot of puts on the 15th of April.
I'm kind of bullish for tomorrow, honestly. Like, I think I think Dork's right. We could open a little lower, but I mean, cyclically, the pre-SLD period's super bullish anyway.
There's a big spike of puts for tomorrow, so.
And then we're gonna get like that positive charm picking up from the monthly expiry too.
Yeah, it looks like April 19th is fairly stacked, but it's not super huge. It's not like
It's not like
a
March.
like a March, but it's still mostly puts. Then the next really big one, end of April, it's actually kind of big. And then 17th of May, kind of big, and then 28th of June is kind of big. But really, it's just okay, you're back, so maybe I can just snap this real quick. I want people to see it. This is what we talk about when we're talking about the rolling put position. Let me annotate it. Just this beautiful
You got a
decaying
picture?
exponential. Yeah, I just popped it into the boardroom.
Oh, okay.
Oh,
Oh,
look
nice.
at that.
This is open. This is just OI. Blue is puts, orange is calls, and then obviously dates on the x-axis.
Oof.
That
That looks bearish as fuck. Jesus
you could
Christ.
just see like this. You could just see like this beautiful decaying exponential as people are selling outwards and.
So short vol's gonna fight into June and then give up.
Well, I think this is the rolling position, right? So they always are just like rolling it out,
Yeah.
rolling it forward. So it's like a cascade.
It's like nobody
just
wants
always
to make any bets on the June Fed meeting. That's what it
Yeah,
looks like to
June's
me,
kind of
right?
low. Yeah.
All right, I gotta
June's-
go.
All right.
Thank you guys for coming on. I appreciate it. Anybody has any questions? I'll see you on the Discord tonight. I'll have Pickles picks out later. JFresh, Dork, thank you guys so much for coming on.
Thanks for
Sorry,
having us,
I gotta wrap it up so quick, but I'm late. So
Yeah, it's good.
All right.
My wife wants me to spend less time with you guys anyway.
yeah, I'm sure.
All
Later,
All right.
later, guys.
Later, guys.
See you, everyone.